So as earnings season wraps up here for Q3 2018, there's a lot we need to talk about in terms of what companies mentioned and reported during their earnings reports. If you haven't noticed, there's been a lot of volatility the last few months, especially since companies have started reporting their earnings for the last quarter. And a lot of investors are pointing this towards tariffs, a lot of investors are pointing this towards the Fed rate hikes. But I'll tell you right now that these were not the main concerns that companies voiced during their last earnings report. So what we're going to do is dive into this, look at some data that came out, and try to figure out what's the reason that there's a lot of fear and uncertainty out there. Let's go. Hey guys, if you're new here, make sure to subscribe down below and drop a huge like. I'm getting a ton of dislikes lately, so let's offset that by hitting 100 likes on this video. But anyways, getting into this, what we're going to be talking today is actually going to be addressing the Dow 30 companies, so some of the 30 largest companies in America. And we're pretty much going to go through some information that we found that dissects and kind of gives us information on what was said during their earnings report and what they feel the causes are for some of their revenue misses or some headwinds that they've been experiencing lately. Now, a lot of companies did come out and report pretty decent numbers, but there were a fair amount of companies that did miss on their revenues, and there was a large chunk of companies that also did guide down for the next quarter. So let's start off here by taking a look at the information collected by FactSet. And pretty much what they've done is they've compiled this all for us, and we can see from this chart here that Forex was actually mentioned the most out of all the issues in the last earnings report for companies. And this not only affected companies in the current quarter, but it's also expected to affect companies in the upcoming quarter as well. 20 out of the 30 Dow companies mentioned Forex as an issue, which is absolutely huge and is not something we can ignore. Companies like Nike, Johnson & Johnson, Procter & Gamble, all consumer-based companies did report these in their earnings report, and they did report that there will most likely be some headwinds with this in the next quarter as well. Now, when people think of Forex and they think of uncertainty in the market and weakness in the market, naturally you're going to think of the trade war with China, and you're going to think that the Chinese yuan is what's causing this. But interestingly enough, this is not true. In fact, none of the 20 companies that mentioned Forex as an issue mentioned the Chinese currency specifically. But they did mention other currencies like the lira in Turkey, the peso in Argentina, the real in Brazil, and the euro across Europe as well. So it's interesting to see that this is not kind of just a China-US issue that we've been seeing with a lot of companies struggling, but it seems to be turning into more of a global issue here. Now, as we go through this chart here, we can see the second thing on this list, second major concern, was raw material and other inflation costs, with 11 out of 30 companies mentioning this in their earnings report. Now, although this may not all be because of tariffs directly, it's almost certain that tariffs contributed a good chunk to this as well. What I think is pretty possible is that companies tried to avoid the word tariffs as much as possible because they know that the market was reacting negatively to that. So what they did was they tried to kind of go around that, mention things like raw materials and all this kind of stuff which they purchase, from other countries, so that their stock price would not get hit as hard because they didn't mention the word tariff. But nonetheless, it is important for us as investors to recognize this, to recognize that this is a pain point right now for companies. And if this continues in 2019, it's going to continue being a pain point for some of the largest companies in America. Now, going back to the list here, we can see that some other causes mentioned were China, of course, hurricane, which was pretty interesting, tariffs, and even the Fed rate hikes. So there's a lot of negativity out there, and there's a lot of things affecting these companies' bottom lines. So like I said, the one thing that does concern me here is that we're seeing weakness not only just between US and China specifically, but it's also more of a global issue. You can see that we're seeing issues in South America, we're seeing issues, of course, like I mentioned, in China. We're also seeing issues in Europe as well. And this, of course, does raise a big red flag going into 2019, because if the world's economy is struggling or is slowing down, if growth isn't as high as expected, then although the US might be doing well, they will eventually get hit by this as well because they are part of that global economy. And if we see the world's economy continue to weaken in 2019, this will of course contribute to more companies missing on their guidances, lowering the guidances for the following quarter, and it's just going to be kind of one thing after another that just keeps bringing things down and brings in more fear into the market. So really the bottom line here, the one thing you should take away from this is to be cautious going into 2019. things are not as strong fundamentally as they were a couple of years ago going into 2017, for example. We are seeing fundamental changes out there in the world's economy. Things are working against the stock market in some way or another, and there is a lot of uncertainty that investors are waiting for before we could potentially move higher. If these things do not get resolved in 2019, we're going to continue moving how we did in 2018, either sideways with a lot of volatility, or we could enter a full-fledged bear market and potentially a global recession or a recession at least in the US. So I do have a video plan which I will release this week going over some of the global numbers and some of the predictions going into 2019 on a global scale for the global economy. So if you are interested in that, make sure to comment down below and let me know. Because if you guys don't want to see these kind of videos, I don't have to produce them. But if you guys enjoy these kind of videos, you enjoy the insight from these kind of videos, make sure to let me know and make sure to show your support by dropping a huge like on this video. Also, don't forget to subscribe and hit that bell notification so you don't miss when I do release that video. Either way, guys, thank you so much for watching. Hope you enjoyed this. Don't forget to invest positively, and I'll see you in the next one. Peace.